In this session of management accounting, we will be starting off with our first chapter, which is introduction. So before I start off with this chapter, let me give you a very brief prelude to this chapter. In this chapter, we will be touching upon what is management accounting. We will be talking about the details or in detail the objectives of management accounting. We will be also speaking about the limitations of management accounting, and with that we will just have an overview of some of the tools that we will be learning as a part of the subject, and then we will get on. So by now, we all have a fair understanding about what is accounting. We all know, we have learned quite a few subjects in accounting. We have learned financial accounting, we've learned fundamentals of accounting. Previous semester, we learned corporate accounting. So we all have a fair understanding about what accounting is. Now, let's just go back to the basics. How do we define accounting? We know that accounting can be defined as the art and the science of recording, classifying, and summarizing transactions. That was the fundamental definition that we have learned. Now, we also learned that there are three branches of accounting. In our earlier sessions, in our earlier subjects, we had learned that there are three branches of accounting. Now, let's just quickly touch upon that. Which are the three branches of accounting? The three branches of accounting are financial accounting, cost accounting, and then management accounting. So there are three branches of accounting, and those three branches of accounting, they are financial accounting, cost accounting, and then management accounting. Now, each of these branches of accounting, it has got a certain significance to play. It has got a certain prominence to play. Now, let's talk about those. Let's start off with each of these branches of accounting one by one. The first branch of accounting is financial accounting. What does financial accounting deal with? Financial accounting deals with the preparation of books of accounts. So basically, if you specialize in being a chartered accountant, the area of the domain that your expertise would be focused on would be the chartered accountancy, and you would be specializing in financial accounting. Then you have cost accounting. Now, what is cost accounting? Cost accounting is the branch of accounting that deals with the study of cost and then methods to reduce that cost. So there are different kinds of costs that you can have in the organization. You could have cost related to material. You could have cost related to labor. You could have cost related to taking a loan. You could have cost related to transportation. So the study of these costs and how you can bring down the cost is what you call as cost accounting. So here you're specializing in the study of cost and the various techniques, the various methods of reducing that cost. Then you have management accounting. What is management accounting? Management accounting is what we are interested in as a part of this session, and we are using accounting information. We are trying to analyze, we are critically trying to evaluate the accounting information that is available with us so that we could take meaningful business decisions. So remember, the management of an organization, they are responsible for taking decisions. Okay? They are responsible for taking key business decisions. So now it is not that the management is not able to take decisions, but we want to take meaningful, we want to take the correct, we want to take the appropriate decisions. Okay. Now, in order to help the management to take better managerial decisions, the branch of accounting which helps us is what is called as management accounting. Okay, so the branch of accounting that deals with the methods of analyzing, evaluating accounting information so that we can go about taking business decisions is what is called as management accounting. So it's not that the management is not able to take decisions. Yes, the management can take decisions, but we want to help the management to take better business decisions, and that's the area where management accounting will come into picture. So, for example, I'm pretty sure you must have read in the newspapers right now, Reliance is trying to buy out the prestigious retail group in India, which is called as Future Group. Future Group, they own the brands such as Big Bazaar, Nilgiris, etc. So they're trying to buy the brand out. Okay, now that's a huge business decision. Now we want to make sense to that business decision, to try and see, are we taking the appropriate decision? So the branch of accounting which will come into picture, which will help us to evaluate the decision that we're taking, is management accounting's role. So remember, there are three branches of accounting: financial accounting, cost accounting, management accounting. Financial accounting is responsible for preparing books of accounts. Then you have cost accounting. Cost accounting analyzes accounting information, and then they would study cost and then help the management to reduce cost. Then management accounting depends on these two branches of accounting. They're utilizing this information to take meaningful business decisions. Moving further, let's just quickly have a recap of what is accounting process. This is a topic that we had touched upon earlier, but it's good if we just try and refresh our memory so that some of these concepts that we had studied earlier remains fresh in our mind. Now we will be talking about the accounting process. What is accounting process? The systematic process of recording, classifying, and summarizing transactions in a business is what you call as accounting process. The sequence of recording, classifying, summarizing, the sequence with which you're carrying out these activities in an organization is what you call as the accounting process. Now, accounting process starts off with transaction. As soon as a transaction takes place in your business, that is when accounting process will come into picture. So there's a transaction taking place, the transaction will get recorded, but where exactly are you recording the transaction? You're recording the transactions in the books of accounts, which is called as journals. So you're merely writing them down chronologically. Depending on the date, depending on the time, you're just writing them down. That is what is called as recording. Now, depending on the nature, depending on the type of transaction, you will go about classifying them. Now, when you classify, basically you're trying to group your transactions. Depending on its type, depending on its nature, you go about grouping your transactions. There are some transactions which are of income in nature. There are some transactions which are of expense in nature. Depending on what type of transaction that you're handling, you will go about grouping them. That is what is called as classify. Now, for you to classify your transaction, the book of account that you'd be utilizing is ledgers. So ledgers are your secondary books of accounts that you're using for classifying your transaction. Finally, you have summarization. So summarization, you want to know what is the net outcome of all the transactions that you have carried out. You want to know what is the net outcome of all the transactions that you have carried out. Now, you do so by preparing the final accounts. You do this by preparing the final accounts. So this in a nutshell is the accounting process. So you're starting off with transactions, you're starting off with recording, then you carry out classifying, and then finally you summarize your transactions, and that is what is referred to as accounting process. Moving further, we would be talking in brief about the summarization of transactions. So I'll just quickly run you through this through this process. So remember, the final step in your accounting process is summarization. Summarization, we are preparing final accounts, but I just want to talk a little bit more in detail about this. As a part of your classification, you will be depending on books of accounts, which is called as ledgers. From ledgers, you would be preparing a trial balance. So trial balance is basically the summary of all the transactions that are carried, is the summary of all the ledgers that you have in a business. Okay? It is a summary of all the ledgers that you have in a business. So that is trial balance. Then you have trading account. So trading account is basically the first final accounts, this thing that you're preparing. Then you have profit and loss account. Profit and loss account is prepared to know the net profit. Then you have balance sheet. So trial balance is a summary, trading is gross profit, profit and loss is net profit. Then you have the balance sheet where you have financial position, then you have your assets, then you have your liabilities, and then finally you have your income statement, which talks about the profit position of the firm. Now, let's get a little bit more in detail. Let's try and understand management accounting in detail because that is what we are interested in. So, we had already very briefly we had understood what management accounting is, the branch of accounting which helps the management to take decisions. Now, here, what we are trying to understand is what specific role does management accounting really have to play? So, management accounting provides all the necessary inputs that are needed by the management to discharge its functions. For the management to function effectively, they need certain inputs. They would be needing certain information. Now, for this, they would be needing certain inputs. Now, for them to discharge their functions. Now, what are the functions of management? Remember, there are four major functions. You have planning, you have organizing, you have directing, and finally you have controlling. Okay? So there are four functions: planning, organizing, directing, controlling. So for them to discharge these four functions, you need inputs, and those inputs are provided by these four functions of planning, organizing, directing, and controlling. Now, the necessary inputs which are needed here, it would be provided to you by management accounting. Now, let's define management accounting in detail. Management accounting is concerned with accounting information that is useful for the management. So management needs certain information so that they can go about carrying out their activities, and that is provided by management accounting. Okay? So the information needed by the management for discharging its functions, that is the role of management accounting. Another definition that we have for management accounting is the essential aim of management accounting should be to assist the management to take decisions. So the aim, the objective, the function is to provide all the necessary information that is needed for the management to take decisions. Okay? So that is what is meant by that is another definition of management accounting. Okay? That is another definition of management accounting. So that is what is meant by management. These are some of the definitions of management accounting. Now, in a nutshell, what we have to remember is that management accounting is responsible for providing all the necessary inputs which are needed by the management to take certain key decisions. Okay, so the the what the necessary information that is needed for the management to take key decisions, and that is provided, and that function is what you call as management accounting. Now let's talk a little bit about the scope. Where exactly or what exactly can you expect from management accounting? So before that, I just want to touch upon another definition of management accounting, and this definition is given by CIMA, Chartered Institute of Management Accountants. They have defined management accounting as an integral part of management concerned with identifying, presenting, and interpreting information. Now, They are utilizing this information, they're formulating strategy, they're planning, they're controlling activities, they're taking decisions, they're optimizing resources, then they're disclosing those information to the shareholders, and finally they're safeguarding the assets. Now, this is a very comprehensive definition of management accounting. CIMA, Chartered Institute of Management Accounting, they are responsible for certifying professionals as management accountants, and which is one of the reasons why that they have given us a very vigorous definition with regards to what management accounting is really all about. Now, let's talk about the scope of management accounting. When we talk about the scope of management accounting, we are trying to understand what are the areas in which management accounting will be able to assist us. Which are the areas that management accounting will be able to support the management. First is analysis and interpretation of accounts. Management accounting, they will help us to identify trends in the depending on the transactions that are carried out. So there are certain trends that the management accounting would be able to analyze, and depending on that, they would be able to come out with certain meaningful decisions. So basically, management accounting will help us to support the management in terms of taking certain key business decisions. Okay, so this is one of the areas where management accounting will be able to support us.
Peter, come take a look at this.
Mr. Daniels.
Mr. Daniels.
Look at this. What's this?
The numbers, they keep getting bigger and bigger.
The clicks are off the charts.
Yeah.
Yoshi, it's Walter. We're back.
Yes, sir!
I need more trees. More trees? I'll get you more trees.
Hey, take a look at wood pulp.
Everything you got on wood pulp right now.
He really loves that thing.
So that ad, though it talks about, it was a funny campaign about advertisements and then evaluating your campaigns properly. It was quite relevant in our context what we were discussing, because it is very appropriate for us to know the trends. We must know the trends of the transactions that are taking place, else it could lead to wrongful interpretations and eventually affect the quality of decisions that are taken. So the branch of accounting which will assist you in this line is management accounting. Then moving on, another scope of management accounting would be reporting. Here, what happens is that you want to present information to the management in a meaningful way. Just not management, there are different stakeholders who are involved. You may have creditors, you may have suppliers, you may have banks, you have different categories of people who are involved. So in order for you to take meaningful decisions in an appropriate way, you need to ensure that the reports are presented in a rightful way. So this is another scope where management accounting will come into picture. Then we need management accounting for internal audit and control. You want to ensure that the activities in your organization, it is happening as per what you have planned. You have to ensure that it is happening in a smooth way. So for this, you may have to periodically conduct different kinds of audits. You may have to have certain control mechanisms in place. So for you to implement these, another area that would come into picture would be management accounting. Finally, you have You may have to strategize and plan out for your income. You may have to have tax planning. Now, the reason being, all companies which are generating revenue, all companies that are generating profit, it is vital for them to pay taxes. Now, to make sure that they have the right strategy in place such that the taxes that are paid are minimal. So, for example, in India, the corporate tax rate is 25%, which means if you end up earning 100 rupees as your profit for the firm, 25 rupees you will have to pay to the government as corporate tax. Now you have to evaluate strategies, you have to think of methodologies uh, to reduce this tax. Now, there are certain exemptions you could utilize. There are certain methods that you could think of such that your net tax paid is less. Finally, there is a concept which is called as MIS. MI stands for Management Information System. So these are repositories of information that you're generating for your future references. So for example, all your marks. Okay, so all your marks, the department stores all your marks. Now, why is the department storing all your marks? The department is storing all your marks because tomorrow, if there is some kind of a cross reference, if there is some kind of evaluation that the management or the department has to do, they would have something to go back and cross check. So we will be creating information systems. We will be creating a repository of informations such that it would help us for future references. Now, the concepts of data, big data, and all that will come into picture over here. Reason being, if you do not effectively capture these details, what could happen is it could lead to redundancy in your data. There could be duplication in your data, and you would be generating unnecessarily a lot of data which may not be of any relevance. It may not be of any relevance. So for you to save yourself a lot of time, a lot of effort in that domain, in that line, we have management information systems in place. Now we will be talking about the functions of management. What role does management have to play? What are the functions of management? Now let's talk about all this. The first function is to collect and provide data. So management accountant is responsible for assimilating information, assimilating data. So there would be some data that will be generated by the financial accountant. There will be some information generated by the cost accountant. So the management accountant is responsible for collecting this data. Now, depending on which stakeholder requires the data, that data would be provided, that data would be shared, that data would be passed on. So that is another function of management accountant. So a management accountant is responsible for collating data and supplying that data to the appropriate stakeholder who needs that information. Management accountant is also responsible for analyzing and interpreting. So the management accountant would analyze information, whatever information that he's getting, he would try and apply the appropriate tool. So for example, if he's talking about cash, so if for example, if you want to understand cash position, then you can apply or you can prepare cash flow statement. If you want to do an evaluation of profitability, you can calculate the profitability ratios. If you want to understand the trend, you can prepare a statement which is called as trend analysis. So depending on the need, the management accountant will end up applying the appropriate tool. Now, it's just not that he will apply the tool, he will interpret that data as well. So he will run through the calculations. Depending on the calculations that are carried out, he will go about telling you what does it signify. So if the trend is a positive trend, what does it signify? If it's a downward trend, what does it signify? So depending on what are the results, then Depending on that, you would go about taking meaningful decisions. Okay, they would go about taking certain meaningful decisions. So this is the place where management accountant would be would come into picture. Okay, so this is the place where management accounting would come into picture. So management accounting, their management accountant is responsible for collecting data, supplying data, and then along with that, they're also depending on the need, depending on the requirement, they would be carrying out certain analysis and supplying that. They would be supplying that information. Okay, so that is about the that is about the management accounting. Now, uh, the management accountant is also responsible for communicating information. So they will communicate the information, they will carry out certain analysis, and in layman terms, they would be communicating that information. Okay, so in such a way that you and I, we can understand, they would go about communicating and then giving us that information. So for example, if ratio, when you carried out ratio analysis, you found out the value of current ratio is 2. The value of current ratio that you have calculated is 2. What does 2 signify? Is it good? Is it bad? If it's bad, how do you improve? If it's good, how do you sustain it? So those kind of communications would be given to you by the management accountant. Then management accountant plays a significant role in organizational planning. For your organization to sustain itself and move forward, they would be assisting you, they would be providing you with inputs so that you can progress in a smooth way. It facilitates control. The management accountant is responsible for helping you in carrying out your control activities in the organization. Okay, they will help you carrying out control activities in the organization. Finally, the management accountant is responsible for coordinating the activities with the different departments. So let's talk about a simple example. Operations department wants to scale up their sales. To scale up their sales, they may need 10 more new employees. Now, for that 10 more new employees, recruitment department has to come into picture, HR department has to do the onboarding, finance department has to do the payment of salary, training department has to do the training, development department has to make sure they are evaluated properly, etc. So one simple activity, we saw there are so many departments which are involved. So in bringing together these departments, the management accountant plays a very crucial role. Okay, the management accountant plays a very important role. So these are some of the functions of management accountant. These are some of the activities that the management accountant has to play in an organization. Now, let's talk about the relationship of management accounting with the other branches of accounting. How does management accounting influence, or what role does management accounting have to play with the others in the organization? We know that there are 3 branches of accounting. So as soon as the transaction takes place, the financial accountant is responsible for bookkeeping that transaction. So as soon as the transaction is taking place in an organization, the financial accountant is responsible for recording and then keeping all the books. He will pass the journal, he will pass the ledger. So all that is done by the financial accountant. So financial accountant will do the bookkeeping, he will prepare the ledger, he will prepare the final accounts, all that. Cost accountant is responsible for evaluating the cost. He will study the cost and then he will strategize how exactly can the business reduce these costs. Is your material cost high? Is your labor cost high? Are your expenses high? So these kind of informations would be provided to you by the cost accountant. So financial accountant, then financial cost accountant gets his inputs from the financial accountant. Okay, the cost accountant gets his inputs from the financial cost accountant gets his inputs from the financial accountant. So depending on whatever information that he's providing, based on that, he would be taking certain calls. He will be taking certain decisions. Then, management accountant, he will be depending on these two branches of accounting. So, the management accountant will take inputs from the financial accountant. They will be taking inputs from the cost accountant. So, based on their inputs, what the management accountant will do is the management accountant will suggest suitable decisions to the management, the senior management, the top level management of the organization. So he will take information from cost accountant, he will take information from financial accountant, they will be doing analysis. Based on the analysis, based on the interpretations, they would give suggestions, they would give recommendations to the management account, the top management, and the top management will go about taking decisions. So, for example, should we start a new product line? Should we start a new plant? Should we take a new office? Should we go to a new state? Should we go to a new city? So, depending on that, the informations, the inputs would be provided by the management accountant. Now, when he gives these inputs to the management account, top management, the management will be taking decisions. They will be taking certain key decisions. This is the direction with which we have to go. Okay, let's start a new plant in this city. Let us start a new office in this state. Let us start a new product line. Until now, we were in clothes. Now, let's get into furniture. Or until now, we were just doing it offline. Let us start online. So, those kind of decisions are taken by the top level management. Now, as soon as the top level management takes these decisions, these would translate automatically into transactions. So depending on what decisions they're taking, it would correspond to transactions. Okay? So let's say you're starting a new plant in a new city. You have to buy land, you have to set up a plant, you have to hire new employees, you have to hire new machinery. All that will correspond to new transactions. Now, these transactions would again be recorded by the financial accountant, and the cycle kicks in again. So this is how the three branches of accounting, they're interrelated with each other. They are interdependent on each other. So transaction translates to financial accountant who does the bookkeeping. Cost accountant will evaluate the transactions, and he will strategize how costs can be reduced. The management account will take inputs for both of them. He will carry out calculations. He will do analysis. Based on the analysis, he will be providing his input to the management. Management will take decisions according to that, and then that will again correspond to transactions. So this is how the three branches of accounting are interdependent. Okay, this is the relationship of management accounting with the other two branches of accounting.